Hello, ladies and gentlemen. The goal of this short presentation is to get you excited about making some real money selling IULs and annuities. Our goal is to get you excited about offering something to your customers that will absolutely change their world and in return double, triple, or even quadruple your income. You might be thinking this is another hype and jolt presentation of some regurgitated sales gimmick. Well, it's not. This is all about real nuts and bolts of a proven financial strategy that's been proven to increase agent income and put their customers in a financial position that is best described as liberating. It's already been tested. The car is already on the track. All you have to do is get in. You don't have to second guess, say yeah but, or prove its worth or validity, because someone else has already invested the past 6 years and hundreds of thousands of dollars to test it and verify it. All you have to do is realize the value of learning something new and then take advantage of it. You have to take the blinders off, open your eyes, be willing to take your practice to a level you've never even dreamed of. You have to realize that conventional thought and practice is actually killing your ability to earn the money you need or want to make. For those of you who marginalize or dismiss our equity optimization program, then you will more than likely continue to trip over dollars to pick up the nickels falling out of your customer's pocket. For those of you who are sick and tired of banging your head against a wall, trying to differentiate yourself from every other planner on the street, then get ready to transform your life and your customers' lives for generations. Now, I need to say this again. This is not hype and jolts. This is bona fide. So let's get going and see how you are going to attract more customers, build stronger relationships, tap into unrealized funding resources, increase premiums, and earn bigger commissions. If any of you are not interested in accomplishing these goals, well, we wish you the best. For those of you who do, this may be the first day of the rest of your career. As a financial planner, you have one of the toughest jobs in the country. You are in one of the most distrusted industries on the planet in what is arguably the worst economy of our generation. What makes it even worse is the age-old methods and means by which you earn your income. Products come and go, but how you approach, sell, and fund your policies hasn't changed in decades. Now, I really need to bring up this point again. Are you chasing the nickels falling out of your customer's pocket to fund policies? Not everyone you talk to has a pile of cash to throw at an IUL or an annuity, correct? You are generally forced to fund your livelihood from their financial scraps. It's a sad and frustrating way to earn a living, isn't it? Foraging on scraps. Is your income tied to your customer's monthly budget? At best, this is a tenuous means to build your own financial future. Is your commission at risk when and if your customer has to make budget cutbacks? Have you seen policy cancellations when your customer has to make some hard financial decisions? This may not always be the case, because as a general rule, you've done a pretty good job of establishing the value of keeping a policy in force, but when the real tough choices need to be made, the customer doesn't consider your welfare a high priority and your income is going to suffer. How would your practice change if you could help your customers fund their policies with annual premiums that are virtually immune to budgetary setbacks, and you could double, triple, or possibly quadruple your commission? Now, before I get into the details of how you can make that a reality, let me ask you a couple more questions. The financial planning industry is ultra competitive, and it's a bloodbath of competition out on the streets. The best way to grow and succeed is to distance yourself and extract yourself from that bloodbath. So let me ask you, is there anything you are doing to differentiate yourself from the competition? And forget about I'm smarter, I've been in the business longer, or have access to better products and services. Every guy or gal on the street can say that, and they offer the exact same thing, and it's all meaningless to the general population. Savvy, discerning customers want to know how you can make their lives better today, not just 15 or 20 years from now. Now, considering your success is all about attracting new customers and building stronger relationships, could you build stronger relationships and close more business if you could help your customers gain 100% control over everything they own, spend, earn, and borrow today? How about if you can improve their monthly cash flow by 20, 30, or even 50% and still fully fund an IUL or an annuity? How about if you could introduce a financial strategy that will be passed from generation to generation? How would your practice and income look if you could introduce your customers to a financial strategy that allows them to function and prosper like the most profitable banks and corporations on the planet. Now, if equity optimization is good for you, it has to be good for your customers too. With either an IUL or an annuity, aren't your customers' returns better when paying annual premiums versus monthly premiums? I hope you said annual. There's faster accumulation of cash value, and it can reduce the overall cost to the customer. Now, what does it do to your income? Would you make more money with annual premiums versus monthly premiums? Would the chance of cancellation or chargeback be reduced? Now, how would they feel if you showed them how to pay annual premiums as opposed to fitting a monthly premium into an already tight budget? Now, here's the glaze on the ham. By employing equity optimization, they could also be totally debt-free in less than 10 years. Do you think you might gain their allegiance and loyalty if you could bring them that life-changing possibility? Now, equity optimization, by definition, prior to 2006, was primarily used among the financial elite to discuss advanced investment concepts, strategies, and techniques. Since 2006, Truth and Equity has branded equity optimization to have meaning at the consumer level. Equity optimization, as defined by Truth and Equity, means to optimize the equitable value of your home, income, investments, and debt to remain lean, liquid, and independent as it relates to all aspects of one's financial resources. So why should one consider equity optimization? Understanding why equity optimization is important is just as important as knowing how it works. So let's look at why you should consider equity optimization for yourself and your customers. Bottom line, the conventional model of banking and borrowing is broken, period. There is a reason the financial condition of the American consumer looks the way it does. Everything, and I mean everything we do with our money, benefits someone else more than it benefits us. From our deposits to our mortgages to our investments and everything in between. Under the conventional rules of engagement, how we bank, borrow, and spend is sucking the life out of our hard-earned income. We're funding everyone else's ability to earn billions, and we don't even get the scraps. If we continue this practice, if we continue to pass this insanity to the next generation, there is no hope for them. We have to do something different. So let's take a look at some of the broken components of the broken business model. Amortized loans are too restrictive, too inflexible, and extremely expensive. Do any of you realize that the math behind a conventionally amortized loan is an annuity formula? It's true. Millions of Americans are funding someone else's annuity while destroying their ability to fund their own. For this reason, you could make a case that conventional loans are the most destructive financial instrument of our society. Let's look at checking accounts. This is another prime indicator of the failed model. What is the real value of a checking account beyond the ability to move money back and forth? Virtually zero. There's no return on investment on a checking account. But on an annual basis, we deposit trillions of dollars into these accounts that return and have no equitable benefit. And we all know who is reaping the rewards of our deposits while convincing us online banking is our just reward. Let's look at qualified investment plans. For some, this is going to be a very controversial subject matter. But who was the genius that convinced us to include the worst money managers on the globe to be integral players in our financial future? The IRS is not an investment advisor. They don't provide value, they diminish value. Americans need to understand it is better to pay tax on the seed instead of the harvest. Now, how does equity optimization work? Well, there are three primary components that make equity optimization work as well as it does. Number one is leverage. The results produced by equity optimization occur through the leveraging of income against debt. Equity optimization allows for 100% leveraging of income as opposed to the average 5 to 10% in a conventional environment. Number two is sweeps. Have any of you ever heard of a sweep account? A sweep account is reserved for commercial banking customers. In a sweep account, the bank will sweep a designated amount of money from the business's general operating account into either an interest-bearing account to earn interest overnight or against an outstanding debt for nightly interest savings. In the morning, the bank will sweep those funds back to the general operating account for normal business operations. Equity optimization employs the same concepts, except the sweep is performed by the customer and the swept funds remain for days instead of hours, as in an overnight sweep account. Number 3 is arbitrage. We are all familiar with this term, so I won't go into it in depth. But equity optimization allows a homeowner to practice arbitrage just like a bank or institutional investor might, but with our help and with far less risk. This is where you start selling bigger policies and earning bigger commissions. It's a beautiful thing, and I'll demonstrate it in a minute. Here's the bottom line on equity optimization when bringing these 3 concepts together. By utilizing the same fundamental techniques as banks and corporations around the globe, you can accomplish all of your financial goals. And here's the bottom line on equity optimization when bringing these concepts together. Equity optimization is simply a more efficient means of personal finance. So let's take a look at the primary components of equity optimization. Equity optimization doesn't work without a mechanism that allows for unfettered access and freedom to move income in and out. The revolving door mechanism of a line of credit, be it a HELOC or a personal line of credit, provides that kind of freedom. A conventional checking account, as previously mentioned, checking accounts should not be used as a holding pen for our monthly income. They are worthless as it relates to equitable value. Money sits in there like a lazy hound dog on the porch. A checking account should only be used for its intended purpose, writing checks or the transference of money from one point to another. The third component, credit cards, not as a consumption tool, but as a means of efficiency. Proper structure and efficient sequence of use of these 3 very common financial products is what optimizes the results produced by equity optimization. Okay, let's get into a little more detail. Here's an example of a personal economic profile of a typical Truth and Equity customer. And to be honest with you, the typical American consumer. We've looked at thousands of these over the years, and this is very typical of average Joe American. As you can see, he has a decent 15-year mortgage. He's got a couple of credit cards, nothing that isn't manageable, and he's obviously not a credit abuser. He's got 1 car payment and monthly expenses that fall within the national average for monthly expenditures for basic needs. As I said, we've looked at thousands of these over the years, and this is a typical household economic profile. And by the way, we've been told it takes months for most planners to get this information. We get it in 20 minutes. Under normal operating procedure with equity optimization, this person could have his entire mortgage paid off in only 4 years and 3 months. Pretty impressive, right? The reason being is he can get 100% of his income working against the debt continually throughout the month, improving monthly cash flow, increasing surpluses while remaining liquid and independent. Under conventional circumstances, this person's positive monthly cash flow is just over $1,300 a month. Under equity optimization, this person's cash flow improves to over $2,300 a month, which I will show you in a minute. This $1,300 is what we generally focus on when presenting an IUL or annuity, right? Of course, we couldn't get this individual to contribute 100% of those funds to a policy, but it's probably safe to assume we could get him to come off of $300 a month or $3,600 a year. What would our average commissions be on that type of policy? We're not going to calculate your commission here. You can do that on your own. But we want you to be thinking about it because you will be conducting the same exercise after equity optimization has been introduced to this scenario. Now let's look at the same profile after implementing equity optimization with an IUL funded with an annualized premium. As you can see, we haven't changed any of the profile numbers. All the numbers are the same except the estimated payoff. It is now 5 years and 8 months. 1 year and 5 months have been added. Why? Because we've annualized his IUL premium as a withdrawal from the funds that we reallocated to and have accumulated in a line of credit. Under normal circumstances, an annual $3,600 premium, as we discussed earlier, would have added only 5 months to the eventual debt-free projection. Doubling the premium to $7,200 took the estimated payoff to 5 years and 2 months. Now, who would have been happy with this increase in the premium? What was the annualized premium to take the payoff to 5 years and 8 months? Are you ready for this? $12,000. That's right. We almost quadrupled the premium, and this individual would still cut close to 5 years off his mortgage and at the same time build an incredible nest egg for themselves. This is how this would break down year by year. You can see in the first line, column B, the opening balance at the start of implementing equity optimization. As we move from 1 year to 5, look at column I, the $12,000 withdrawal for his IUL. This is where you become a very special planner. Even with the big premium withdrawals per year, the outstanding balance on the debt is falling at a rapid pace until it disappears at month 69. Debt-free in 69 months and $60,000 into an IUL. And obviously that number will grow substantially over time without the customer ever feeling a budgetary constraint. And 5 months later, with $187,500 available in liquid funds, he makes another premium payment of $12,000, which is paid off in just 2 months. And this will happen again year after year until retirement. TruthInEquity.com has been teaching homeowners how to do this for almost 7 years in the worst economy of our generation, in the worst possible industry. Do you think we've survived for 7 years because it doesn't work? How many of you are offering this to your prospects and customers right now? How many of you think you could mine your database and find new customers or offer something new to existing customers? Not to mention, which one of you would want to do this for yourself? When you become a practitioner and are trained to offer this to your customers, you will learn all the finite details of equity optimization. Now, what does this mean to homeowners? For one, you help them gain more control and authority over their income, debt, and expenses. They become debt management experts, and they have the ability to accelerate the payoff of any debt they may accumulate in the future. You will enhance their wealth management and retirement portfolio, but more importantly, you will help them get more out of what they own and what they earn. What does this mean to you, the agent? For one, you decommoditize yourself. You become a rose amongst the dandelions. You can mine your database because there's still gold to be had with current customers and those prospects that are languishing in your database. You've got a bigger pool of funds to work with. Now you've got annualized premiums to work with versus monthly premiums. And bigger premiums equal bigger commissions. Now, who is TruthInEquity.com? Bill Westrom and David Wells established Truth in Equity in 2006. They're headquartered and incorporated in Spring Hill, Florida. David and Bill have a career's worth of knowledge and experience in the banking and mortgage industry. Now, what does Truth in Equity actually do, and why are they important in this relationship? Truth in Equity are the experts at facilitating the implementation and execution of the equity optimization strategy. When you bring a customer to Truth in Equity, they will conduct a complete and thorough analysis of your customer's personal economy via the profile. They will consult with you and your customer as it relates to your customer's financial goals and aspirations per their individual circumstance. They'll structure program configuration based on the analysis and consultation and pass the customer along to one of their participating banks so the customer can get their financing in place. Now keep in mind, Truth in Equity is not a bank, lender, or mortgage broker. Though that is their expertise, they do not provide those services. They have extensive knowledge of the lending environment. They know who and who not to work with as it relates to obtaining the right financing. Once the financing is in place, they will teach the customer everything they need to know as it relates to executing and operating the program at peak efficiency. They also offer a 6-month money-back guarantee. If the customer is doing everything they are supposed to be doing and the program is not performing as prescribed, Truth in Equity will gladly refund their fee. So who does what in this relationship? As an agent, all we ask of you is to endorse and recommend equity optimization and Truth in Equity as an integral component of your customer's overall financial plan. You will initiate the customer's entry into the Truth in Equity system through your own exclusive guestbook page. You'll assist them in completing their personal profile. You'll demonstrate results as you've seen in this video, and have them sign a deferred contract, which you will learn more about later. As the process moves forward, we ask that you support our Truth in Equity staff to ensure the process moves smoothly. much like you do today when working with the support staff in your own office. Our Truth and Equity staff will provide a thorough analysis of the customer's personal profile and consult with them to ensure proper program structure based on their personal economy. Our staff will work directly with the customer as it relates to the finite details of implementing and executing the equity optimization strategy. And this is where the dollar signs start attaching themselves to this relationship. As equity optimization experts, our staff will keep you informed as equity optimization presents opportunities for you to maximize your relationship with your customer. And of course, they will endorse and support everything you do as the customer's financial planner. So what's next? Well, we request you to sign our guest book at truthandequity.com/agent visitor so we know you are interested in learning more about equity optimization for yourself and your customers. By signing our guest book, you are not obligating yourself to anything and you won't be bombarded with emails. You will simply be telling us you are interested in learning more. We have a comprehensive indoctrination process that will teach you everything you need to know about working with Truth and Equity and how to present equity optimization to prospects and customers. You can also become a practitioner. You can reap the rewards of equity optimization yourself and add credibility to your message when talking to your customers about implementing the most powerful financial strategy on the planet. This is not mandatory, but highly recommended on many fronts. Are you ready to get started? Visit truthandequity.com/agent visitor.